somewhere between $1 million in revenue, whether it's annual recurring revenue or just $1 million in revenue and $10 million in revenue, you are going to have to increase the sophistication of your financial planning. And you're going to have to do this for a couple of reasons, because as you get bigger, it's not about how well you're running a company. It's about how well you're competing with your peers. And let's say you're going out for, you want to sell your company, and you might think you're doing great. You've got the best mousetrap out there, and you're selling it, you're profitable, you're running a good business, your employees are happy, you're doing great. Well, that's not why people get acquired. People get acquired because you have better technology or better businesses. So someone who's thinking about buying your company is going to evaluate all the mousetrap vendors that are out there. Maybe somebody has just as good of a mousetrap as you do, but you've cracked the code for selling it to home users. You just own the home user market. Maybe somebody has the same mousetrap technology that you do, and they own the mouse exterminator business. Those are sort of reasons to buy a company where they understand your business. And the kind of tactics and KPIs, which are things people use to track your business, are going to be like, look, what is your cost to acquire a customer? They're going to evaluate you on that. So even though you might have a great business, you're profitable, your employees are happy, you're spending maybe twice as much to make a customer happy as perhaps your nearest competitor, or maybe you're doing it half as much as they are. Now, another thing people are going to judge you on is your cost of goods sold. At the end of the day, maybe you sell the best mousetrap out there, but your mousetrap costs 50 cents for you to build, and a competitor's mousetrap costs $1. Now, maybe your both mousetraps are the same, but yours is obviously a more scalable and sustainable business. Now, when you think about cost of goods sold, you need to add up all of your business. You're basically going to take your revenue, you're going to subtract it from the cost of operating the business, and that's a way you can start looking at your cost of running the business. You divide that by the number of products that are out there, and you can compute those things. Now, with more sophistication, you can talk about your engineering cost, your marketing cost, your sales cost, and this is where a professional accounting and finance team can help you think about those things. Now, the more you have access to that type of information, the better you're going to be at predicting and running your business, right? So if you want to understand cash flow, if you understand new revenue models, if you want to understand, how to make those risks and projections out there, you need to understand those kind of basic things about your business. Now, a lot of founders out there don't spend the time to do this. They focus on the tech, they focus on the customers, and you need to do that, but you can't forget that third leg of running a business, which is operating the business.